Mswatu inkosi ithula akayithathe akahambe nayo akayithathe yotinza bakuni akayithathe
You're watching the Tuesday broadcast of Market View here on Eswatini TV. I'm Natsile. Glad to have you joining me on the program. For thousands of graduates, graduating can mark the beginning of a long wait and search for employment in a labor market where even entry-level positions often demand previous work experience. And to bridge that gap, the Eswatini Youth Empowerment Program (EAP) is designed to expose graduates to the workplace while providing practical experience, skills, mentorship, and an opportunity to build the networks that could help open the door to future and long-term employment. For 2026, about 150 young graduates are set to benefit from the program's graduate internship placement initiative, with participants to be deployed to different host institutions across both the public and private sector. But as another cohort of graduates prepares to enter the workplace, can 6 months of practical experience really deliver much of a career in difference? We'll speak to EAP focal person Professor Shabangu, but first this afternoon let's get you up to speed with some of the latest in business. In our business news, government is going to the market for longer-term treasury bonds, which will have a floating base rate. This has been shared by the Minister for Finance, Honourable New Reichenberg. The Minister was speaking during Finance in Focus, where he unpacked how government plans to raise financing.
One of the things that happened this week was we go to market for treasury bonds. Keeping in mind, treasury bills are the short-term ones, which government issues. It's where government loans money in our domestic market normally. We got treasury bills, which are up to a year, so for 3 months, 6 months, 9 months, and a year. We got treasury bonds, which are now normally an amount of years. At the moment, we've got like a 3-year, 5-year, 7-year, 9-year bond program. And so, as we normally do, we go to the market for these bills and bonds. But what we always do is we fix the rate. So we always say, right, we're going to pay a fixed rate over this period of time. The shorter, normally the cheaper it is, and the longer we pay a bit more for the longer term ones. But what we decided now was to consider even a longer term than 9 years, but instead of it making a fixed rate, because we need to keep in mind when you fix the rate, all the people, the reason why it's more expensive over the longer term is people build in risk because they don't know what's the interest rates, what's inflation going to do in 9 years' time. So they build in risk, and risk means government pays more for it. So we decided to do some longer term. We said, let's try a 15-year and maybe even in time go for a 20-year treasury bond, but now not make it a fixed rate, make it what you call a floating base rate, meaning that one will then have an inflation-linked and linked base, and then a top-up, a fixed top-up on top of that, which will then give it, meaning that the funders don't need to price in risk into the tool. The theory risk is out of it, but because it's cost for a bit longer, we'll see what the price is. So we're testing the market, and I think it's a very good thing. People like pension funds, where a 25-year-old working today is still going to work for 40 years before the money must go out of the fund. They like longer instruments often because the money will be with them for a long time. It needs to really grow as much interest in that long period of time. So that the person, receiving their pension receives a whole lot more even than what they put in. And it's inflation linked, which means they're not only getting inflation, they're getting something more than inflation. So I think it ticks all the boxes, and we'll see how that goes. We're hoping to raise money, a bit of money for government on these new kind of treasury bonds that we are floating.
The National Maize Corporation, NMC, says the prices it offers farmers for maize and beans are significantly higher than those prevailing across the SADC region. The Chief Executive Officer, Mavela Vilane, says they are aware that some farmers feel the prices being offered are too low, but maintains that the prices are in fact competitive within the regional market. The CEO was responding to questions on what the corporation is doing to ensure that farmers receive the best possible prices as NMC reviews its performance strategy.
If you were to go to South Africa today, a ton of maize would cost you 3,900 emalangeni in the market. We are paying a farmer 6,000 emalangeni for a ton of maize here in Eswatini. That is probably the best price within the Southern African region. And this price is informed by gross margins. It's not just a thumb-suck price, and there is a market advisory committee that meets regularly to assist NMC in determining the price. And within that committee, we also have farmers, we also have millers, we have consumers, just to name a few. So it's an inclusive process of price determination, because we don't want any player within the value chain to pay for the inefficiencies of any other value chain player. With beans, we are currently paying over 22,000 tons, emalangeni per ton. Just across the border in South Africa, you get a ton, they are paying around 19, maximum 20,000 emalangeni per ton. It's the best price in the region that we are offering as NMC. I think what is very much important for farmers to realize the benefits is for our farmers to actually maximize on farm level efficiencies to ensure that what is possible from the genetics that we put into the soil is realized at the output level. Because as it stands now, we've got maize seed varieties that can give you up to 12 tons per hectare under rain-fed conditions. But our farmers are struggling to get 5, maximum 6 tons from that genetic that is put into the soil. So that's the game that we now need to focus on and say, how do we move the farmers to realizing the full genetic potential of the seed varieties that we put on the ground? Similarly with beans, you can get up to 3 tons per hectare if you do everything right, but our farmers are struggling to get 0.8 or 0.9 tons per hectare. So that's the space now that we want to focus on, other than just focusing on increasing the area under production. We think if we can focus on productivity improvement with the same amount of land under production now, we can double or even triple the national output and meet our national demand goals.
And you're up to date with some of the latest in business. After the break, we speak all things the Eswatini Youth Empowerment Program. Stay with us.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Welcome back. You're still watching Market View, and moving on with the program. The Eswatini National Youth Council, in collaboration with the United Nations Development Programme, UNDP, has this morning launched a major youth empowerment initiative under the Eswatini Youth Empowerment Programme, EEP. Through an investment of approximately 1 million emalangeni, the program will provide training and graduate trainee internship opportunities to 150 out-of-school young people. This initiative comes at a critical time, with the State of the Youth report putting youth unemployment in Eswatini at 48.7%. So just how important is this investment in empowering young people, building their skills and creating pathways into employment, and can programs such as this one play a meaningful role in driving economic development and reducing youth unemployment in the country? We are now joined by Professor Shabangu, who heads, or rather is the focal person for the project, to unpack the significance of this initiative. Professor, thank you very much for your time this afternoon. Maybe I'll just start with the figure that we already know: 150 out-of-school youth that are already set to benefit from the program. Talk to us about that, and how will they be deployed? What can we expect their placements to look like across, whether in government or in public sector?
Okay, thank you so much. Yes, I think just to clarify first, for the 150, the 150 is not going to be taken at once. They're taken in batches because the spaces where they're going to be allocated also needs to be secured first. So we're bringing the stakeholders together, which is the government ministry, so that we can actually have a consensus. You know, we are actually agreeing to saying how many do you need, so that we can know if the 50 that we are taking for this batch are going to be swallowed also. We understand that also we are looking at other internship programs that are happening when a student is before graduation. Part of the course, they need to also get that space. So we need to also balance those kind of things, that those who are about to graduate, they can also get the space, but also those who are now staying at home or who have stayed at home for more than 2 years can also get, you know, the practical sense of the job market, I can say.
Sorry to cut you. The State of the Youth report shows a concerning picture, or it paints rather a concerning picture of young people's participation in the economy, especially the labor market. I want to get into that. What gaps among young people? You've seen the number of applications that the ENYC receives for the program. What gaps, or what story does that tell you about the realities that young people are facing out there in terms of youth unemployment, and how has that informed how EAP has been designed?
Actually, what the State of the Youth also highlights is the mismatch of the skills of young people. I understand that even today we can talk about how many teachers are about to graduate, but when you look at the job market, you don't know where these young people are going. We can talk about our institutions that, or tertiary institutions that are actually having 27,000 of young people going to graduate each year, but the job market is going to swallow only 1,000. So what the EAP has done, we said those that are staying at home now, graduated years back, they can get a chance to actually get a feel of how a workplace look like. I'm talking about, it's a paid internship. So we are saying you can come and apply and get to understand how you can actually add value into your skills. We know that when you're looking for a job, you can have the beautiful CV and the employer will be asking you how many years of experience. And then those are the kind of things that we're addressing. We're saying, let's get a young person into having the experience that is needed for any job. So we are giving you the 6 months so that you can be on the job training. You have a mentor or a supervisor in that department who's going to teach you how these jobs are done. And then you can be able to apply and say, now I have the experience. And I think young people can understand that through this program, is a government, supported program, through the UNDP and also the MEPD, which is the Ministry of Economic Planning and Development, working with ENYC. We understand that it's really intentional to say these young people that are graduating from there, they'll be known that there'll be quality. Quality because we make sure, we supervise, we check, we work with the mentors, they report. There's so many things that we do. And before even they're on board, we train them, we orient them to understand. There's also other programs that we do for them, the Mindset Shift program, because we understand that some of the issues are the impossibility that we've already said in our minds, something cannot happen. So young people already feel like we cannot get jobs, there's nothing for us. So when you actually teach them about the opportunities they have, they get to understand that they need to play a certain role in the economy of this country.
Professor, there is a barrier here, or the paradox, that in order to get a job, I need experience. But at the same time, the young person, in order to get the experience, they need to get the job. Is EAP an intervention that is designed to break that cycle?
Actually, exactly that. It is that. The challenge with it is that it can't swallow everyone. But what the government of Eswatini has done, said, no, let's have many programs for young people to actually choose. What you need to do is just to look around. I think what I can actually encourage young people to do is to follow the right pages on social media, because there are so many opportunities for these young people. We're talking about grants out there. We're talking about loans out there for young people, because we understand there is a portion of young people who wants to be employed, but there is a portion of young people who want to actually create jobs for others. So let's cater for those who want also the jobs in the EAP program. So what we are doing, we know that we are intentional, but we can't take everyone. So the 150 that we are going to take in pages are the ones that we can take this year. But I can talk about numbers that we've also done in the previous years. I'm talking about 2023, I think over 300 young people were also swallowed. So we are trying, but we can't take, and we are looking at funding that we can get from partners, that we can get from government to increase the margin of young people, maybe 1,000 each year. It can also work best, which means we are trying our best through the government of Eswatini to make sure that young people get the feel and the experience of the job market, and then they can be able. And what we've seen, to be honest with you, is some of them that got this opportunity were even swallowed in the same institutions, which means now you are practicing here and they see that you have the soft skills that are needed for this job, because it's not just about you being qualified to say, I have the master's degree now. When you get to the job, how do you sell yourself? How do you behave? How do you communicate? The soft skills that are needed in that workplace, the teamwork that you need to also, show. When they see that, they then swallow you in. So we've seen other young people getting jobs, securing permanent positions.
Sure. What we know is, as per the report, the State of Youth report, I like to refer to it, is that we have a 48.7% youth unemployment figure, and we're talking about young people being absorbed into different industries under the program, whether in 50s, as long as it needs to take to get young people exposed to the labor market. How can we scale up the numbers? While some are being absorbed as part of the program, there's a stat out there, there's thousands that are adding on to that stat as part of the unemployed. But let's get the figure up to thousands. How can we do that?
What our government is doing these days is amazing. There's so many projects. I think even the King has highlighted that we need to prioritize. Even the Prime Minister in his speeches when he was talking about the State of the Youth launch, I remember at the church, he talked about, prioritizing young people's job creation. So these interventions, there's many programs that are there helping young people to create jobs, some to actually get these placements, and also just to encourage the institutions that we have. I'm talking about the government ministries, the private sector, to swallow young people, actually to give young people a chance to add value into the economy. So there's so many interventions. More than that, there's so much money that has been actually put into these bags to help young people develop themselves. I'm talking about the programs out there that many institutions are doing, the Young Heroes, there's so many programs under ENYC, there's so many programs under UNDP. We are actually trying to make sure that the look or the picture that we are seeing now about the job unemployment is actually going down. We're helping others to create jobs. We're helping others to get into the job market, because we know we have diversity in those. There are those who want to get into the job market. There are those who want to create jobs as well.
Yeah. EAP is a result of multi-sectoral partnerships, whether it's in private sector or it's government. But I want to ask, has there been commitments from any institution to say we are willing to employ these young graduates just beyond their internship training program?
I'm not going to specify institutions, but from now, they're just onboarding. They're about to start in the next month, but I can tell you now, I have many organizations who are saying we have spaces and we're not going to hire, we will wait for them. When they come, then we take from that batch. So I can tell you now, from even the previous experience, we had so many young people that were swallowed, and this private sector and also the government ministries are intentional because we are having these conversations and the support that they need, because we can't just put a young person into their space. We also follow up, how are they behaving, how can we support? So the togetherness, they're working together in making sure that a young person develops, makes it easier for them to say, no, we can work with you.
Sure. 6 months gives a young person experience, but it doesn't necessarily guarantee a job.
Yes.
So this is my last one. what are the strategies in place to ensure that after their 6-month exposure to the industry, this young person really does not go back to this, being part of the unemployed? They don't go back to that number, but they actually do something for themselves beyond the 6 months.
That's why when we are orienting them, we're giving them these programs that actually they say they stay for 5 days with us, where we train them on mindset change, we train them on CV writing, we train them on business plan, because we know that when they come out of this program, some of them will be thinking, no, I can start my own organization, because they've learned how an organization is run. They understand governance and leadership. So we teach them all these things so that they can have options, those who are not going to get swallowed in that sector. Sure. So every time when they're onboarding, they are given many options. And the many options includes the networks that they are building. Because we believe that one of the key things that young people need to be skilled on is to understanding the power of networks. Power of networks is how you actually use your network. You are in the job market now, you are working with many stakeholders. I've seen young people who are actually attached in businesses. We meet them in those corridors. Now they're working with this one and they know somebody from there. And when you show their skill, they show your skill, even if that instance can swallow you, somebody can. Right. Because you've proved yourself that I can do it.
Sure. Professor Olivier, thank you very much for talking to us. That was Professor Shabangu, who is the focal person for the Eswatini Youth Empowerment Program, where 150 out-of-school youth are set to benefit and will be deployed to different industries and companies and parastatals in batches as part of the program. This is Market View. We're back after this with in-house economist Sanele Sibia. Stay with us.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back for our market analysis segment. In-house economist Sanele Sibia joins us virtually. Mr. Sibia, good afternoon. Thank you very much for your time. So the Fed's Jackson Hole Symposium is in focus this week, and also in terms of tech, we are expecting NVIDIA to report earnings probably tomorrow. What would a strong or weak earnings report by NVIDIA mean for the Nasdaq?
Thank you, Notsile. Good afternoon to you, and also good afternoon to the viewers. So yeah, that's what we are looking at in terms of markets. So what NVIDIA does, it somehow becomes the litmus stick or the litmus test for this AI stock and the tech stocks overall. Remember, NVIDIA is one of the biggest chip manufacturers and chip makers in the US. So if NVIDIA comes and gives us the strong earnings as expected, it would somehow, put into a bay the issue around the tech sell-off that we've been seeing, because, what investors are now looking for is profitability out of AI. We are seeing the huge amounts of spending that are on the plans, but now the question is becoming, when will we start to see a profit out of this expanding that we've been driving? So overall, we're expecting that to somehow see an improvement in terms of those AI stocks, and also would expect the Nasdaq to therefore remain on the positive and continue to rally. But as we are waiting to see those news, and also on the backdrop of that symposium at Jackson Hole, and also looking at what the Treasury is doing around, the buybacks of bonds and what that does for the Treasury yield bond curve. So what we expect to see is once we start seeing that buyback go into action, and we see beautiful news coming out of India, and we see a rather stable interest rate trajectory, then we expect the Nasdaq to continue to rally. But as it were, the Nasdaq is down 200 points as of close, sitting at $25,980.19 in terms of overall share volumes. The S&P 500 is down 21.51 points, and the old economy there, the industrials and the Dow Jones Industrial Average, have actually gained 140.15 points in today's trade, because you know that once we start seeing such movements, we then expect you see this pivoting of money from tech stocks into the industrials as we are seeing. And then also seeing what the sanctions that have been imposed against Iran, and we've seen the price of oil relating relatively well to those in terms of they were beneath what markets actually expected. Now that's what we're seeing driving the mood in Europe and London. So we're seeing London up 14.0 points, and Frankfurt in Germany up 220 points, and the CAC 40 in France up 39 points. Now that is actually due to those news that we are seeing around those sanctions coming through from Iran. It's not the economic carnage that Donald Trump said it was going to be. It's basically those same sanctions that Iran has had before, which were lifted, as a good faith, and now they've been brought back into view. So now we're seeing markets rallying to that same sentiments carries through to Asia. The Nikkei is up 328 points. The Hang Seng Index there is flatlining, down 6.23 points, and the Shanghai Composite Index is slightly up 7.44 points. But we're seeing subdued activity there in Hong Kong and in the mainland because of those structural vulnerabilities that are still abide in the mainland economy and also in the Hong Kong economy, more especially coming through from the real estate sector. And then Johannesburg is really just responding positively to the news of the price of Brent crude coming below the $90 per barrel mark. We're seeing the Johannesburg Stock Exchange up 15.19 points in today's trade, to sit on that 116,000 mark. And then in terms of Eswatini, we've not seen any changes in the Eswatini Stock Exchange. Then coming into commodities, we're seeing the commodities gold, just back on that 4,600 mark, and still maintaining that higher 4,600, but not going back to that 4,700 mark after we saw those sanctions coming out. And then the price of crude oil is down to $87.98 per barrel. Now that was after we got a softer landing in terms of those tariffs, in terms of those sanctions on Iran. And then in terms of the exchange rate, the Lilangeni is relatively stronger today. It's on a rally. We are back on that $15 Malangeni range per dollar. Now that's a range we've not seen ever since the Zuma years. So we're seeing the Lilangeni sitting at 15.99 against the euro, given the relative weakness of against the dollar, given the relative weakness of the dollar, and we're just waiting to see what the impact this treasury buyback is going to have on that bond curve yield and the resultant impact on the dollar. And we're also strong against the euro, sitting at 18.65, and we're also strong against the Japanese yen, up some 0.36 percentage points. Now that's because once you see a bit of uncertainty coming out of the market, we tend to pivot back to emerging currency markets. Thank you, Natalie.
Thank you very much, Mr. Spear. That was economist Anneliese Spear coming through with insights on the day's trade. Though this has been the Tuesday edition of Market View from myself and the team. Thank you so much for tuning in. Until next time, goodbye.
Mswati inkosi ithula akayithathe akahambe nayo akayithathe yotinza bakehuni
execution style. And we're going to start in outer space 400 kilometers above our heads. We're two astronauts, Francis Sophie Adenau and the American Neil Menon.